I'm here today with Catherine from Maji. So hello, Catherine.
Hi.
Hello. And today we're going to be talking about salary exchange and how we can use it to save your clients pounds. Let's get started. I am here today to welcome along from Maji, Catherine, who's going to be sharing with you how we can use salary exchange through the Maji software in order to save national insurance and increase the contributions that team members can make into their pension funds. As I always say, the beauty of these conversations are the questions that you ask, the questions that the community ask as we go along. So feel free, please, to pop any questions you've got in the Q&A box. You'll find it to the right-hand side of your raised hand feature. And use the chat box by all means, but if you could keep that clean for chat and make sure it goes in the Q&A box, then I will definitely see the questions as they come through, and I will interrupt Catherine and make sure that any questions that you have got have been answered. So over to you, Catherine, with the usual virtual round of applause.
Thank you.
Yep.
Oh, that is not my right window. Hang on a second. Hang on. Sorry, my sharing skills are failing me. It's absolutely lovely to see everybody, and welcome to our presentation. I'm just going to see if I can share the right screen for you. There we go, got it. Brilliant.
Perfect.
So yeah, thank you so much, Simon, for hosting us today, and thank you for providing such a great opportunity for us to share our learning with the community. And yeah, it's really wonderful to see you all on the call. My name is Catherine. I'm the Partnerships Director for Maji, and my role is to bring new partners and their clients on board. And we also have our COO and co-founder Megan here today as well. And yeah, a little bit more about Maji, just to let you know who we are and what we do. We're a money and pensions coaching app, or I should say digital financial planning and coaching platform. And one of the things that we do is we make sure that employers and their employees are getting the most out of their company pension. And as part of that, we help companies set up and engage staff in HMRC's salary sacrifice scheme, which is what has led, I'm pretty sure all of you, to come to the session today to find out a bit more about it. So we're going to be covering 4 topics today. The first thing is we're going to explain what salary sacrifice is and why you should consider it for your company and your clients, in fact, I should say. And the thing is that we don't actually like to call it salary sacrifice. I'm going to tell you a bit more about that later. And just to emphasize, a few of you asked in the pre-questions about different kinds of salary sacrifice. Today, this is all about pension salary sacrifice. There are some other kinds of salary sacrifice, but we won't be covering those today, and it's not our area of expertise. We're going to talk to you about how to implement salary sacrifice for your clients, both in a technical sense and also all the compliance stuff that you'll need to cover. And thirdly, we're going to explain how Maji can help you overcome some of the barriers that might be there for offering the scheme to your clients. We're also going to show you some of the other ways that Maji can help you add lots of extra value for your clients. And then we'll be explaining the 2 ways that we work with accountants to help their clients, and then to see if either option is of interest to you. And we'll let you know the next steps if you do want to become a partner. And of course, as Simon said, we're going to have time at the end for questions, so please do pop them into the chat and we'll get back to them when we can. So before we start, I would like to understand a bit more about where each of you is at when it comes to salary sacrifice. So this is time for us to deploy our poll. I think, Simon, you might need to do that. Brilliant. So are you a complete beginner with salary sacrifice? Don't know anything about it? Do you know a little bit, or do you know a lot about salary sacrifice so far? If you could pop your answer in. Okay, Simon, I think I'm going to need you to tell me the results of the poll.
Yeah, so we have, it's going all of a sudden, everybody's woken up,
Still going
Catherine,
up.
but we have nobody in the audience that knows a lot. We have 40% thereabouts are complete beginners and 60% know a little. So amongst a group of accountants, we've got nobody that feels as though they know a lot. 40% complete beginners and 60% know a little.
Brilliant. Thank you so much, Simon. So yeah, a little bit of a spread at the lower end. So if you don't know anything about salary sacrifice, we are actually going to go through the complete basics right now. If you already know though, it's going to be a bit of a recap for you. And then we'll be going into some more of the detail. So hopefully there's something for everyone here today. And if you don't know a lot about it, that is absolutely fine, because as we're going to see, not many people do. So let's start with our salary sacrifice basics, our salary sacrifice 101. What actually is it? The first thing to explain is that we don't actually like this term sacrifice because it sounds kind of violent and off-putting. Because really, salary sacrifice, which we call salary exchange, the other technical term for it, is actually a really good thing for most people. There's no sacrifice, there's no suffering involved. It's just the exchange of one benefit for another, which is where this other term comes from. So on a basic level, salary exchange is a more tax efficient way for your client to make payments into an employee's pension account. So what happens is the employee agrees for the employer to make the pension payment into their pension on their behalf. So if we think about a normal situation and we think about those default minimum pension contributions, the employee would normally be paying 5% into their pension. If they opt into salary exchange, they stop paying anything in. And then we have the other side for the employer. Outside of salary exchange, they're normally paying that default minimum of 3% into the pension. And in salary exchange, they now pay that full 8%. So it's just a little swap in who's paying. In return, the employee exchanges their salary. So 5% comes off their salary and that 5% goes into the pension from the employer. The result of all of this is that the employee's pension contribution is taken off their salary before the national insurance tax is calculated. So this means that both the employee and the employer stop paying national insurance tax on the pension contribution of the employee. And this is also where that mitigation of the national insurance increase comes in, which I know will be a big reason why lots of you are here today. So for the employers, that's 15.05% in tax that they won't pay on the employee's pension contribution. And for the employees, it's 13.25% that they won't pay. Now that's lower rate taxpayers. If they're any higher rate taxpayers, it's only 3.25% that they'll save. But they're getting another really big benefit. They get their tax relief straight away without needing to claim it back from HMRC. And not having to complete the self-assessment tax return, as I'm sure you will understand, is a big advantage of salary exchange for higher rate taxpayers. And it really is that simple. And for the vast majority of people and employers, it's an absolute win-win. Now, I wanted to show you how that reduction works for the employees in a bit more detail, because this sometimes causes some confusion. So I've done a breakdown here and I've based these calculations on someone earning £35,000, paying their contributions on full earnings. Obviously, if someone's paying on qualifying earnings, it's just taking off those qualifying amounts. And what you can see, if you have a look at the gross earnings, which is in the middle of the table, the gross earnings go down. But if you look at the bottom of the table, the take-home pay actually goes up due to those NI savings. So it really is a big benefit for that employee who's a lower rate taxpayer. Just to be clear, and this is where some confusion often comes in, the saving isn't made on income tax, and that's because people don't pay income tax on their pension contribution anyway. In the relief at source, which is kind of the normal pension arrangements, that tax is claimed back. But with this arrangement, which becomes a net pay kind of arrangement, the income tax is, the tax relief is applied straight away, so the income tax never goes out. So although it might look slightly different on the pay slip, at the end of the day, the tax paid is the same. Okay, So that was salary exchange in the basic version. But I want to find out what else you know. So I'm going to do a little quiz. All right. Pop your answer into the chat, and I might need Simon to tell me what people are popping in there. What percentage of large companies do you think are using salary exchange already? Give me your best guess. Simon can tell me what's coming up.
So we've got 40 from Tina, 30 from Emmett, 90 from Malcolm, 60. Wrong chat, sorry, 60%. Oh, I wait in the chat, I wait in the Q&A box. I'll see where you're going.
No worries, no worries.
So yeah, we've got 60, 60, 35, 50.
Okay, so we're kind of hovering around the middle, it seems, as an average. So it's actually 85% of large companies are already using salary exchange. So if so many of these large companies are doing it, there must be something in it. But when we come to the smaller companies, there's a big difference, because actually fewer than 40% of SMEs are using salary exchange. And what's the reason for that? We're going to touch on some of the causes later on, but this might have something to do with it. What percentage of accountants do you think are currently using salary exchange with their clients? Again, pop your guess in the chat.
So we've got 10, 10, 5, 15, 10, 30. Yeah,
we're in the right ballpark. So it's actually fewer than 10% of accountants are currently using salary exchange with their clients. And I would love to know more about why that might be. But before we get to that, let's think about the benefits and the reasons why people might want to use this with their clients. 90% of accountants aren't currently passing on. Let's have a think about this NI increase, because I know that is in our minds at the moment. You've heard about it coming in April 2022. There's going to be that change, that rise in the NI levels. And salary exchange, you might have already seen that it's a great way to mitigate that rise. Let's have a look at an example of how much someone's going to save. So how much more NI is someone going to pay? They're on a £35,000 per annum salary. How much more are they going to pay after April 2022? Let's just take a couple of guesses in the chat. Maybe you've already done these calculations.
I don't think they will have done, Catherine. It'll be really interesting to see, because I bet Excel spreadsheets are being correct. Yeah, Esther's put no idea.
Yeah.
Oh, 260 from Andrew. So there'll be Excel spreadsheets and all sorts coming out. With, Paul said 520. So Andrew at 260. Paul's gone double at 520. And then Alex has said what Andrew says.
Really not bad. So it's £318. So their total NI contribution after this increase is going to be £3,370, which is a decent chunk of cash. I know, I could do lots of things with £300. That's going to be gone from my account. If they opted into salary exchange and they were paying 5% pension contribution, they would save £191 there. So their total NI contribution would only go up to £3,179. And if they increase their pension contributions, and we're going to discuss this a bit more later on, but increasing pension contributions increases the amount that you save on the NI, because you're not paying NI on that contribution. So that person would then save £343, and their total NI contribution would be £3,027, which is pretty much almost the same as what they were paying before the NI increase. So there is a way to mitigate that rise. There is a way to save on that increase. There is also the benefit for the company, because they are also saving money on their NI payments. So if we imagine we've got a company of 10 employees, they're each earning 35k and they're making the 5% pension contributions. How much would that company save every year if all of the employees opted into salary exchange? A, B, or C? What do we think? Pop A, B, or C into the chat.
I've got a C from Malcolm.
Yeah.
Esther's put, if in doubt, go B. And then I got a C from Paul and a
Fair
C from
strategy.
Andrew.
Yep.
Another C.
Wonderful. Okay. So the immediate saving was B, £2,164. But it's kind of a trick question because C is also the right answer. If people are helped to increase their pension contributions to the recommended level of 12%, if they actually do that increase, the saving for the employer would almost double to £3,895, which is a significant amount of money for a small company. Okay, coming back to you in this quiz, either from what you've known before or maybe what you've been hearing in this webinar so far, why are you most interested in salary exchange? I want you to put your response into the chat. A, my clients want me to save them money. B, my clients have asked about the NI rise. C, my clients want me to add additional strategic value. D, I want to increase my income. Or E, I want to differentiate my service. Which one is motivating you the most?
So we got A, B, A, C, E, all except B from Malcolm. Another E, so a mix between E's and A's.
Wonderful. Simon, can people speak in this session?
They can if I invite them onto the panel.
Okay, so I'm wondering if anyone who chose A would like to explain to the group why you've chosen that. I think you can raise your hand and Simon will be able to pick on you.
And this is where everybody will hide.
Yeah. If you're feeling brave,
Oh, Esther. So if I do this,
oh,
Esther,
brilliant.
you ready? And then Esther should appear. Are you there, Esther?
I'm here. Keep me out. Oh, that was a trick. You just got rid of me. Yeah, all I was going to A is just because all clients care about is saving money. That's it. Just don't. They want to cut corners everywhere they can, and obviously it's our job to make sure they do it compliantly.
Yes, brilliant. And I know obviously lots of you put A, so I'm sure you share that feeling. Does anyone who put E want to say something quickly about that, differentiating your service?
I'm going to put you back in the ranks, Esther.
Yeah,
Bye-bye.
Bye.
Anyone feeling brave to tell us about differentiating your service?
And Malcolm, let me see if I can do that. And Malcolm, you should thank you also,
yeah, thank you, Malcolm.
Here comes Malcolm. Thank you for volunteering as well, Paul.
I'm here.
Hello, Malcolm. Got you.
Well, if 10% of accountants or less are using it and it saves money, it seems like a no-brainer to be in the winning side.
Good, very good point. Very, very good point. And
I mean, I think a lot of accountants have thought salary sacrifices in the too hard box.
Yes, we will address that point, Malcolm, because I think it's a really, really important one. But yeah, why not join the small group of people who are offering? Thank you.
Yeah, thank you, Mal. Greenstones within that too hard box as well. So thank you, Malcolm. Yeah,
to come back to Esther's point about clients looking to save costs, cut costs and save money. We know that 64% of SMEs in studies are actually looking to cut their costs as a result of COVID. You know, we know that businesses have struggled. We know that people have had tough times. So now it's even more imperative that we help them to save money. And coming back to this point about offering more for your clients, differentiating your service, it's really worth bearing in mind that research shows us business owners do want their accountants to be more like a trusted advisor. And trusted advisors do two things. They offer a wider range of services than someone who's just doing the books, and they know their clients really well. They know their clients better than any other kind of service that they might use. So Salary Exchange is one way to show yourself to be that trusted advisor. I'm going to get you to do one last thing in this interactive session, and this is where I'm going to ask Mark to kindly share the link in the chat, because we've got a calculator for you to download. Download the calculator and see what one of your clients could save. So it's a spreadsheet that you download. So Mark's going to pop it in the chat for us. It's a Google link.
Yeah,
download from
it's
Google
there.
Drive. Yeah. And there are a few different tabs on this calculator, and you can have a play around with this after the session and use it as you wish. There's a tab called qualifying earnings, Salary Exchange and qualifying earnings. You can use that to see what the company will save. And then there's also a tab called individuals, and you can have a look at each employee. If you knew the ins and outs of what each employee's salary was, you could put in the figures there. But you just want to have, the one to use now would be the one that says with qualifying earnings, as I presume most of your clients will be using those.
That's the one headed salary sacrifice calculator with qualified earnings.
Yeah. Yeah.
Thank you.
Yeah. And you can just pop in an average salary. If you're not sure, you can do a rough ballpark figure for now, just to give yourself a sense of what the savings would be. And this is using the new NI figures as well. So from April, how much they're going to save. Okay. If you've got a figure that you're willing to share, you can pop it into the chat and let us know how much one of your clients might save through making the switch.
So mine's set. I've got it's set up as review only, Catherine. I need to request access. I don't know whether that's might be the same as anybody else.
I did set for everybody.
Okay, that might just because I have a bit of a funny problem with Google Sheets and whatnot. Anyway, so that's a bit of a thing for me, perhaps. Esther said, "Do we use the tab if they have all pensionable pay included?"
There is a tab. I believe there is a tab for if they are on full pensionable pay. Let me just open it myself and I will just confirm that.
Yeah, Paul has just said save it to Excel and open it from there, and it lets you change it. So Paul's cracked it. We can't quite see that. If you just move it upwards and left a little bit.
There we go. We see it here. So yeah, there's the tab here, salary sacrifice calculator, and that will be with the full pensionable earnings. Or if you do with QE, that will be with the qualifying earnings.
Thank you. And then you just change the 40,000.
Just pop in. So it's average salary. If you're not sure, rough ballpark figure, number of employees. And then what you'll see down here, if you scroll down, you're going to see their annual savings as an initial figure. And what you'll see when you go across to the side here is if their employees increase their contributions, which as we mentioned increases the saving, that's how much the savings is going to go up by. Now this doesn't look like a lot because I've just got one employee here. But obviously for a company with 10 employees, it'd be 10 times that amount. Okay, I think we're still having a play.
Yeah, I've not got any savings as yet in the box.
Okay, well, I'll let you have a play with that. You can also play around with it, of course, after the session. You've got it now to keep, and you can have a look for your clients at how much they will save. But I'd like to talk to you about the implementation. So if you're ready to leave your spreadsheet aside for a moment.
Yeah, we're good.
Yeah. Okay, so let's have a think about implementation. We've heard about lots of the benefits, and we've heard that some people are saying, it's in that too difficult box. How difficult do you think it is going to be to implement? If you put a 1 to 5 in the chat, just quickly, just get a rough sense of how we're feeling.
We got a 5 straight away from Cheryl. Yeah, 5, 4, 5, 4.
Okay, so
Everybody
we're
else
feeling...
is still playing with a 3 from Paul, 3 from Tina, 4.5 from Jeff, very precise, Jeff, 3 from Alan.
So we're feeling like it might be on the trickier side. Okay, so I'm going to go through what the steps are, and I'm going to show you what it looks like to implement, and then maybe that's going to change your mind. So let's think about the technical side. Technically, setting up an employee on the salary exchange arrangement is quite simple. There are 2 steps for you to complete. The first is to change your pension setup on the pension provider, and the second is to make changes to the payroll setup. So I'm going to show you an example of how to make these changes with two organisations, People's Pension and QuickBooks Advanced, which are the ones that we use. And the steps are fairly similar for other software. There might be a few little differences, but it's just to give you an idea of what's involved. So first of all, on the People's Pension, you've got to set up a worker group for the people who've opted into the scheme. So the groups allow you to group employees according to their pension settings. And then what I'm going to do is I'm going to set the employer contribution for the group as 8% and the employee contribution as 0%, which is what I showed you a bit earlier on about how it works. And that's all you need to do to set up the settings there. Then for your opted in employees, if they're in the pension and they've opted into salary exchange, you put them in the relevant worker group. And that's it on People's Pension. With QuickBooks, so with your payroll, you need to go to your pension settings, which on QuickBooks is under payroll settings and pension settings. It's kind of similar to the groups. You need to create a contribution plan. So I make a new one here for people who've opted in. And again, I'm setting the contribution for the employee to 0 and the employer contribution to the full amount. Now on QuickBooks, QuickBooks Advanced, I should say, it also has a deduction that you can set up, and it actually says there, as you might be able to see, it's a bit small, but it says salary sacrifice there. You put in salary sacrifice is the 5%, and that's then set up as a pension salary sacrifice deduction category. Then you need to go for each employee who's opted in, you need to make sure that their contributions are set up in the right way and that you put on the salary sacrifice percentage of 5%. And if they change their contribution amounts, obviously you'd put in what they are for that person. And that's it. And then you can check the payslip. It comes up here on the payslip as a pre-tax deduction, and you can check the amount that's coming off there. So if that's all that's involved, why isn't everyone doing this already? Good question. The reason is that there are 5 steps that need to happen before you can make those simple changes to the pension and the payroll setup. And historically, it's been a pain for a small employer to take these on, and that makes it harder for you as an accountant to recommend this process. These 5 steps are to do with HR, compliance, and employment obligations, and I'm going to explain them to you in more detail now. The first thing to think about is the national minimum wage. Obviously, the employer needs to ensure that as the employees exchange their salary, no one's salary goes below minimum wage. And this is an ongoing commitment because I mentioned that the employees could increase the amount they save into their pension. And then they'll be exchanging more of their salary. So they could drop below that level, even if they're not below it to begin with. And this is really vital. Your clients could be fined up to £20,000 per worker, and they can be publicly named and shamed and banned from being a company director for up to 15 years if they're not paying minimum wage. The other thing to think about from a salary point of view is the lower earnings threshold. It's It's really important that the salary, again, doesn't drop below that lower earnings threshold, because then the employee could stop paying any national insurance tax, and therefore they could lose qualifying years from their state pension. And this is the total opposite of what we're trying to do here with salary exchange. Imagine that you allowed people to opt in and then 5 years later they realise they've robbed themselves of a state pension. Definitely not. It's also a statutory obligation that employees should be fully informed about the scheme in order to give active consent. Not only could it be a punishable offence not to educate the employees, but also there are a small number of people for whom it might not be appropriate to opt into salary exchange, such as people who are claiming statutory pay. For these people, opting in would reduce the amount of statutory pay they'd be eligible for. And so they need to be informed about the impacts of opting in, and fully educating them is really, really important. No one wants to be investigated by HMRC, and no one wants to make their employees worse off. The employees also need a mechanism to opt in and out of the scheme. And usually this is done by signing something to say that they understand they want to opt in. There'll be lots of paperwork going back and forth. The consent of the employees needs to be recorded, and the records need to be kept for the employees. And HMRC can investigate whether this consent has been given at any time. So you've got to keep those records in an orderly and accessible fashion. And finally, in order to be part of the scheme, the employee's employment contract needs to be amended to show that they're choosing to exchange some of their salary for the benefit, which here is the contribution into their pension. And changing the employment contract of each employee is a real pain for your clients, their HR leaders, their CEOs, etc. And this contract also needs to be updated every time the employee changes their contribution rate into the pension to reflect that difference in the exchange. Thankfully, there is a way to make all of this effortless, secure, and safe for all of your clients. And that's because we've automated and digitized those 5 steps. So the changes that are needed to payroll and pension are basically served on a plate to you. So I'm going to tell you a bit more about how it works now. In summary, Maji makes it easier because we cover all of those things. We educate the employees, we run a workshop for them to explain the concept, we give them a personalised breakdown of what they'll save, give them loads of information. We assess the employees, we apply contribution caps, we automate those contract addenda, we postpone new employees with a one-click way to opt out, and we store all the records for your clients so that they will be compliant. We also engage the employees with reminders, nudges, and a much more exciting digital experience than just a dry email or letter that they're going to forget about. And Maji integrates the pension into a wider financial wellbeing experience with a sophisticated financial planning tool, digital coaching journeys, masterclasses, and discounted access to vetted experts, which is all stuff I'm going to come back to a little bit later on when I tell you about Maji's extra benefits. How this all works and how it actually gets delivered is through our 2 main elements, the employer portal, which is also what you as the accountant would use, and the employee app. So the employer portal is a data store for all the information about the pension and each employee, and for the settings on the accounts. And the information on the portal is shared with the employees on their employee app. The employees then interact with their app, so they can opt into salary exchange on there, they can increase their pension savings and lots of other things. So if they do request a change to payroll and pension, that request comes through to the employer portal where you as the accountant will be able to approve it, and you will then have the list of things to implement on the next payroll. There are loads more brilliant things I'm going to show you or discuss later on, but I just want to take a much closer look at the salary exchange element, how it actually works, because that's the whole reason why we're here today. So first point, I mentioned the national minimum wage compliance. We help your clients actually stay compliant with national minimum wage. And that's because we automatically assess all employees' eligibility for the scheme. And we'll keep the employees above the minimum wage because if they want to change their contribution rate, we will automatically cap their savings. And if employees aren't eligible, if they're too close to the minimum wage, they will just never get invited to the scheme in the first place. So we are ensuring that all your clients' employees are always safe. Secondly, we take that lower earnings threshold into account. So although it's not a legal obligation, it's really important to us that we're looking after our users' interests. We want them to save adequately for older age. So going below this threshold is just not the thing that we want to happen. So any employees who are at risk of going below this just won't be invited to the scheme. And then any contribution requests are going to be checked and they're going to be capped automatically. Thirdly, I mentioned the statutory duty to educate the employees about what they're consenting to. And education is really our bread and butter. We've worked tirelessly to make this complicated and sometimes boring information really engaging and simple. So, for example, we personalise everything that a user's shown to make sure it's relevant to them and useful. And all employees are shown exactly what they're going to say from opting into the scheme, to make it tangible, to make it real. In the same way, we make it clear to users which situations might make it the wrong choice for them. So you and your clients can rest assured that all employees are fully informed, and if they consent, the best practices have been followed. Fourth, Maji makes it easy for employees to opt in, and I'll show you exactly how they do this later, and to opt out if they need to, without the need for emails going back and forth, letters, bits of paper, all the things that can get lost. Users have a really simple interface, so they just tick a box to give their consent, and a dated record of this is stored on the Maji system for both the employee and the employer to access if they want. And you as the accountant get the list of changes to do in payroll right in time for your next payroll run. We also solve that need for some contract changes because when the employee opts in, we create a contract addendum that that means they don't need to update the employment contract basically. And the addendum complements and updates the existing terms of their employment contract, so it's compliant. The copy of the addendum is also stored on the Maji system, so the employer can print it out, or they can just keep it on Maji to refer to if they need to. And yeah, there's no hassle around contract changes. It's a full and compliant record for your clients. And finally, this is an extra step because before we only had 5, but now Maji actually goes further because we maximise the savings that are possible for your clients and their employees. And this is where we're helping you deliver extra monetary value to your clients by making it super easy for the employees to raise their contributions. So we mentioned earlier increasing savings. This is also really important just for people's quality of life because the default amounts that most employees are saving, that 8%, is actually only about 50% of what they should be saving to have that same quality of life in retirement. So we help people understand and increase their savings, and therefore the saving for the employer goes up. As the example from our 10-person company shows, if you remember, that saving goes from £2,164 to £3,895. I want to show you very quickly how this works on our actual platform so you can see how easy it is. So I'm just going to stop sharing for 1 minute so that I can then show you the Maji platform. Here we go, but it has logged me out. So let me log in quickly and I'll bring you to our Maji dashboard. Now this is the employee platform because I mentioned the 2 parts. But this is just the part for employees. And the employees coming to this dashboard have usually done their introductory workshop with us. So they know a bit more about salary exchange, they know a bit more about pensions and about Maji, not coming to this cold. We've tried to design it so that it's really simple. We've got all of the most important parts of Maji here. And on the right-hand side, they've got their digital coaching journeys, which at the moment are focused on pensions. So this first coaching journey here, the most important one to start off with, helps them optimise their workplace pension. So during the workshop, we explain to them how to do this. They just click through and then they can see here the personalised breakdown of how much money they're actually going to get. So here, this person is in a really good position because they are going to get £112 from opting into salary exchange through their NI cost saving. And then they're also going to be benefiting from a matching scheme from their employer if they increase their savings. So that's quite a big bit of money that they could get by taking these simple steps. And we help them understand what that looks like in a tangible sense. What does that mean at the end of the day? Now, in order to opt into salary exchange, super quick. Excuse me. So here I open opt into salary exchange and I can see again how much money I'm going to get on an annual basis, my extra take home pay. I see a little bit of information, a recap of what I've already heard about salary exchange. And if I want to opt in, all I need to do is select my date. So I'm going to opt in for the next payroll. I can see my contract addendum here. I can see how much is going to go into my pension, what my new salary is going to be, and I tick the box and I press submit. And that is all it takes. And that information will then come through to you to apply on your payroll and pension. Similarly, super easy to increase the savings. So again, I can see a breakdown, what I'm going to get in my tax relief, and then I can choose here how much to save. We recommend starting with 1%, but they can choose however much they like, so I can go up to 8%. And I can see there exactly how much is going to go into my pension. Again, it's a very, very quick submission to you. The records will be stored, it's all compliance, and you will have that list of changes to make. There's loads more on Maji, but I don't have time to show you all of it today. So I'm going to pause there on the demo. But I will tell you a little bit later about how you can get a full demo if you want to see the rest of it. Okay, let's come back to let's come back to our presentation. So I'm going to come back here to share with you. There we go. Yes, there we go. Brilliant. So that's how we make salary exchange really, really simple and easy. I've shown you the full journey for the salary exchange. And I mentioned loads of other value and benefits that we have in Maji. So I'm going to just mention them briefly now. The first thing is that we take a burden off your clients by increasing the pension knowledge and engagement of the employees. Because at the end of the day, studies show that 77% of employees don't understand their pension and they want their employers to do more to help them. But the truth is, as I'm sure you've encountered, most employers find this really tricky. When your clients have the Maji app, their employees get a digital financial planning and coaching companion that helps them understand their finances in full. They can pull in the live valuation of all their pension accounts, both past and present, so they can see all their pensions in one place. And actually soon they'll be able to see all of their accounts and savings on Maji. And they can make their holistic financial plan as well. So here you're taking the burden off your clients' hands because their employees will understand their pension better. You're also going to be reducing the HR burden for your clients. So on the Maji app, we've got a chat feature, which means we will take care of all employee questions, concerns, and requests around the pension. So it's less stress, less hassle for your clients, and they can also ask us questions too. And Maji's app also supports you with all of your auto-enrollment duties. So you can send enrollments and postponement notices through Maji, you can store the records, and you can manage re-enrollments as well. But the benefits don't stop there. When you partner with Maji, you'll be giving your clients a state-of-the-art employee benefit of the kind that's usually only distributed by expensive employee benefit consultants or large corporates. So this is really going to set your service apart with extra value and quality. Maji is unique in the market of offering a holistic financial wellbeing assessment that generates a personalised schedule of interventions to improve employees' financial situation wherever they need help. And digital coaching journey then leads every employee towards a brighter financial future. And every employee will be invited to a financial wellbeing workshop to kick off their Maji experience. And all of this wrapped up in an app where the price is actually covered by the savings that are made through salary exchange, which I'll talk about a bit later. Additionally, with so many sick days taken off with financial worries and so many people in a financial stress due to COVID, we know that financial well-being is absolutely the next huge issue for HR leaders, the next huge issue in well-being. So with Maji, you're offering a really strategic solution to this really, really key issue. And it's not just digital, because Maji has a marketplace of vetted advisors, coaches and experts who are offering free sessions and discounted rates to Maji users. And if you have an IFA partner that you work with, as I know lots of you will do, you can feature them, especially on Maji as well. Additionally, the money experts are offering a monthly masterclass on a range of financial topics for Maji users. So we're really offering a really rich and holistic experience in financial wellbeing. So having heard all of the benefits of both Salary Exchange and of Maji, how do you partner with us? We have two options. First of all, I want you to keep this figure in your mind. The savings from Salary Exchange are an average of £15 per employee per month. So just hold that in your mind. So first option is that you can become a business partner with us. So this is where you pay Maji per employee, you pay us a license fee model, essentially. And then you can roll Maji into your existing package, or you can charge your clients a fee of your choosing. So this starts from £3.49 per employee per month, which gives you a 12.5% discount on retail price. And there's zero risk to you because you're only going to pay for Maji when your clients are already using the service. If you'd rather have your clients pay us directly, then you can share in the revenue as a referral partner. So the fee for your clients would start from £3.99 per employee per month, and there'd be a 50p revenue share for you. And if you wanted to charge a service fee on top, that would also be possible to increase that revenue. So it really depends on what works for you and your clients. And with both routes, your clients are going to save money overall. So if we're coming back to our 10-person company on the 35k salaries, these are the savings they were going to potentially make. And let's say you rolled out Maji for this company as a referral partner. So you're getting that 50p referral fee from Maji per employee per month, and that's £60 a year. And if you charged a service fee, let's say £2.50, you would get an extra £300 of income. Your clients, even with the cost of Maji, would get the net saving of £1,385 to £3,116 per year, which is still a really significant chunk of cash, even with that cost of Maji included. Or if you have a bigger practice, and let's say you had 500 clients and you rolled out Maji to all of them with the referral partner model, charging that £2.50 service fee on top, you get £250 from Maji per month, and you'd get £1,250 for your clients per month. So you'd have an income of £18,000 in total. And that income actually becomes pretty much a passive income. And this is a really important point about Maji. At the start, yes, people are opting in, they might change their savings rates, there's some initial activity, but after that initial activity, the employees don't tend to change their contributions very much. And they don't usually opt out of Salary Exchange. So actually, after the initial setup and a little bit of admin on the payroll, there isn't very much to do. But that income is coming with little work over the year. I really hope that you've seen enough today to get a sense of what working with Maji could bring to you and your clients. And seeing the steps here, it's super easy to get started. First of all, you just need to tell your clients about us, and we've got some brochures you can share with them and materials you can send them. Then you'll need to set up their accounts, a Maji account for each client that wants to go ahead. Really, really simple, takes about half an hour to set up the account. And then finally, you'll need to activate the employee logins, and we'll arrange with the client to do the workshop for them. And that's it. And then savings will start for your client within the month. So if you want to move forwards, I've shown you lots and lots of great reasons why you would want to bring Salary Exchange to your clients and do it with Maji. You're going to help them save money and support their employees, and you're going to be adding real value to them and differentiating your offer and service. And with our switchover, Salary Exchange becomes really easy and secure to implement. So I would love to give you a one-to-one demonstration of the whole of Maji and show you everything in a lot more detail. And if you're going to book your demo before 12 p.m. on October the 31st, we've got an offer which is to increase that referral fee for your first client to £1. So you can see my email address on the screen here, catherine@maji.io. I'm going to ask Mark to also put my Calendly link in the chat. Calendly is where you can book a slot to chat with me to do the demo. Which brings us to any questions before we wrap up.
Brilliant, Catherine. So the Calendly link has gone into the chat box. So just click on that or email Catherine. What was the email address, Catherine? Just remind me.
It is Catherine@Maji.io. I'll leave that up while we do the questions.
Excellent, thank you. And just whilst we're on, because there's one or two questions gone through the chat box, and depending on how the settings are set up, some people don't get to see the questions because they've just come through to us. So basically, for confirmation, Maji works with any pension provider and any payroll software. Basically, there's no, as long as it can cope with CSV files or whatever, it can cope with everything.
Yes. Yeah, so you don't need to, your clients don't need to switch pension provider or switch payroll. The only thing I would point out on payroll is that QuickBooks Basics doesn't support the salary exchange as a pre-tax deduction. I had a long chat with QuickBooks about that, and there wasn't a way to make it work. So that's the only payroll I know of that really can't deal with salary exchange. The rest are fine.
Okay, and then Andrew's asked, how will people like Peninsula react to the changes to their employment contracts?
Can you clarify people like Peninsula?
Yeah, so Peninsula, they provide bog standard employment contracts, or say bog standard. They will write employment contracts for employers. Am I right in saying, Catherine, that the actual addendum to the contract doesn't change the contract? It just allows them to make the salary exchange.
Exactly. Yeah, exactly. It's a little, I don't know what we'd call it. It's just an addendum, isn't it? And it just allows those changes to be made legally without needing to create a whole new contract.
Thank you. And then Esther's asked, is there a dashboard for us to see all of our clients in one place?
So at the moment, it's a toggle between clients, and that's how it works. So you can just toggle between the list and you'll get an email with all the changes that need to be made.
Thank you. And Chris has asked, is this just for pensions or does it work with electric company cars?
So at the, well, not even at the moment, because I don't think we will ever cover any other forms of salary exchange. We are focused on financial well-being and helping people save for the future. That's our mission. So we just deal with pension salary sacrifice. If you are working with a client that's doing another form of salary sacrifice, it would be a case of taking that into account when you upload the employee's salary onto Maji. But we could deal with that on a case-by-case basis when we do the setup, if that's something that has come up.
Okay, thank you. And then Esther's asked, what is the minimum salary this works for? So do you know what the break-even point is, for want of a better phrase?
Yeah, it's about 7% above, 7 to 10% above national minimum wage. We automatically calculate that on Maji when you put in the employee's salary, and then it will say yes or no. Obviously, yeah, if you're thinking about a company as a whole and wondering if it's right for them, yeah, let's say 10% to be on the safe side over national minimum wage. This gives them a clear enough margin.
Okay, thank you. And then Jenny's asked, are there any reporting requirements around salary sacrifice?
So there aren't. You don't need to tell HMRC that you're doing this specifically. You just need to have the records ready so that if they said, how's your pension arrangement, then you could show them that you've done it correctly. But no, you don't need to specifically tell them. You need to do your normal pension declarations for the clients, but nothing special.
Thank you. I've got 3 more questions in the system. I'm just conscious of the time. I've got 6 minutes left. So if anybody's got any questions, you pop them in the Q&A box, then we will gladly answer them if we get time before we disappear. Stephen has asked, clients often insist on us showing the pre-sacrifice pay on the payslip and then the sacrifice as a deduction. Is this okay? Yeah,
I mean, I showed you the example that QuickBooks does. They just do that automatically. They just put it on as the pre-tax deduction. So I should think most payrolls will be doing exactly the same thing. Or however you make your pay slips, that is absolutely fine to put it on as a pre-tax deduction.
Okay, thank you. And then Carolyn's asked, what are the risks and employment law implications, or are there any risks or in employment law complications with this?
I think I've been through the main one, which is the national minimum wage. And then also, yeah, collecting the records of consent and making sure you have done that, and the contract addenda. So those are really the main things. I mean, salary exchange or salary sacrifice for pensions is one of the few things that was kept. There was a change a few years ago where the government said we don't want you to do it for lots of things, but pensions was one that they kept. So it is all kosher. It is all sanctioned by the government.
And then the comment you made earlier about the statutory payments, am I right in saying that if they reduce their salaries, in effect, some of the statutory payments could be like, for example, statutory maternity pay, the 90% of that at the start could be a bit lower. So they just need to be made aware of that. That's the...
Exactly. And so that's actually one of the few situations in which salary exchange isn't a good idea. If someone's planning to go on parental leave, for example. But in that case, they can just opt out and opt back in. And with Maji, that's super easy to do. They just press opt out and they just press opt in.
And that just neatly brings me to a Bill has asked, what sides of switching to salary sacrifice and how can it be fixed? So the question is it possible to revert back once you've opted out or opted in, whichever way around it is?
Yeah, absolutely. So you can change the whole scheme back, or you can take individual people out. And when you've got those worker groups and those contribution plans, which you'll have on payroll and pension, it's just a case of moving them to the appropriate one and making sure their settings, if they were 0% and 8%, have gone back to 5 and 3.
Brilliant. Excellent. Let me just check the chat box. There's no other questions in the chat box or the Q&A. So we've been through all of the questions, Catherine. Thank you very much. So that just leaves me to say thank you for everybody, or to everybody that's come along today and to ask the questions. I know when I first saw the way it worked and the implications of it from both an accountancy point of view and from a team member perspective, I was fascinated by it. So thank you very much for coming along today and for asking the questions. Thank you, Catherine, for coming along and for sharing with the community. That's all for now, and goodbye. Thank you, Catherine.
Thank you.
Thank you. Bye-bye. What a session that was with Catherine and Megan from Maji. Please remember to like this video. If you've got any comments or questions, pop them down below and we will gladly answer them for you. And also subscribe to this channel so you get notified the next time that we upload some great content for you. On this screen now, somewhere around, you will see the next videos that we suggest you watch to inspire, challenge and support you to run the accountancy practice you want to run.